Monetary policy is moderately restrictive, and it has been working as expected. Both sides of the Fed's dual mandate are now in sight. The U.S. economy grew at a solid pace through the first half of 2024. Most forecasts project real GDP growth in the range of 1.5% to 2% in the second half of the year, and my own expectations for growth in the second half of the year are consistent with this range. Absent further shocks to the economy, inflation seems to have returned to a path consistent with 2% over time. Inflation increased in the first 4 months of 2024, driven mostly by supply rather than demand factors, and encouragingly, inflation has since declined. Headline and core inflation have declined. Services and shelter inflation have declined at a lower pace. They remain a little sticky, while goods price inflation has been falling as consumers have become more price sensitive. There is some more disinflation work to do. PC inflation remains somewhat above the Fed's 2% target, depending on how you measure it. The labor market has been normalizing and is no longer overheated. Lower payroll and average hourly earnings growth, rising claims for unemployment, and a higher unemployment rate all signal labor market cooling. Layoffs remain low. A growing labor supply, a moderation in the hiring rate, and a higher job separation rate appear to explain the recent increase in the unemployment rate. A tight labor market seems to no longer pose a clear upside risk to inflation. I supported the FOMC's recent decision to maintain the current target range for the federal funds rate as the committee seeks greater confidence that inflation is moving sustainably towards 2%. The recent data have bolstered my confidence. The FOMC is attentive to the risks to both sides of its dual mandate, as am I. It now appears that the balance of risks on inflation and unemployment have shifted. Absent new economic shocks, the risk of inflation rising seems to have declined, while the risk of unemployment rising further seems to have increased. From my perspective, the risks to both sides of the mandate seem more balanced. Accordingly, the time may be nearing when an adjustment to moderately restrictive policy may be appropriate. As we approach future meetings, I will be carefully weighing data, reports from contacts, forecasts, and scenarios about the economy,